I was at FIRE already, right, before I got married. And I was thinking of like, hey, maybe I should take a sabbatical break.
Yes,
Right,
do
and
it.
then
This is why we cannot achieve anything.
just want to take a
because
break
Tina
without
and I are
working.
always like, let's
and
say.
you're still students and you want to take a break. What's going on?
Yeah, that's why. Like, what are we doing? Tina, I'm lost.
Why? Is it because we're in the middle of this fake forest?
No, it's because I don't know how to start investing.
Sally, that's exactly why we're here today. So, welcome back to FIREside Chats, the podcast where we take you through Singaporeans' experience with savings, investing, and making money. I'm Tina.
And I'm Sally. As always, a disclaimer before we start. The stories and discussions shared in this podcast are based on personal experiences and individual journeys. They are intended for informational and entertainment purposes only and should not be considered financial advice.
Today, we are so excited to have a special guest with us, someone who knows all about investing, personal finance, and the importance of balancing short-term goals with long-term dreams. Let us give a warm welcome to Sheng Shi, Business Development and Partnerships Lead at Endowus.
Yay!
Welcome.
Yeah, thank you both for inviting me. I'm Sheng Shi, or you can call me SS. I'm Partnerships Lead at Endowus. I've been in the investment industry for about 11 years for now, right? So I've previously worked in real estate investments. Now I'm in Endowus, right? So I'm in my mid 30s now. I've just got married last year.
Congratulations.
Thank you. And I guess since we're on the topic on investing and money management, it's also good to share a little bit about my growing up experience and how my parents raised me up.
Yes,
Oh,
definitely.
we love stories.
Yes.
Tell us all about it.
Yeah, so my parents are both civil servants. They are very comfortable, but they choose to be frugal by choice, right? So, you know, when it comes to like going out and getting a drink for ourselves, we will intentionally not go to 7-Eleven, right?
Wow.
We'll walk towards the supermarket and get the cheaper drinks, right? So this kind of like understanding trade-off between cost, convenience is something that I've been brought up with.
That's really good.
Wow.
Yeah.
That's really different in comparison to Tina and I, who have been we do make smart financial decisions when it comes to little things, but in the broader scale, I guess we're kind of aliens and beginners when it comes to this world of financial literacy. So, especially for this podcast, we have special rules today for you, Sheng Shi.
Special rules.
So, there's two of them. Firstly, because SS, you are very experienced and knowledgeable in the world of investing, whereas Tina and I are like aliens to this world. Every time we're confused by a term or a phrase, we'll raise our stakes and say marshmallow. Then, could we please trouble you to re-explain what you just said, but in a simpler way?
Sure, let's do that.
Okay, very awesome. And for our second rule, Tina and I are learning and we're students here. So, as students, we are supposed to...
Learn.
Yes, very good. So, especially for this episode, we'll be taking note of the tips you say. And at the end, we'll reveal our biggest takeaways on our respective whiteboards. Then at the end, could you determine who had the better takeaway or the more accurate one?
Sure, let's do that.
Awesome.
Alright.
Okay.
So, for many Gen Zs like Sally and I, right, the idea of investing sounds really scary. It's almost as if it's only for people with a lot of money. Is that true?
For you to start investing, you must have savings first, right? I believe everyone would have a little bit of savings, right? It's just a matter of whether they have enough to invest for something longer term.
I see. So, for us, like, we are completely new to investing. What's the first thing we should know?
That investments, there's risk involved, right? And then there's no certainty of outcome.
I see. Okay. And what are some things I should know to make me assured that I can and will make money from investments?
It's important to know the different type of investment and asset classes behind it, right? So putting it very, very simplistically, right? There are the two most common asset classes when we think about investing are stocks and bonds,
I
right?
feel like I should write this down.
Yeah.
So please raise your marshmallow if I'm going too difficult, right? But generally, when you buy a stock, you are getting an ownership of a company, right? And being a owner or a shareholder of a company, you own the residual value of the firm.
Marshmallow.
Thank you, Tina.
What is residual Thingy, sorry, what was that?
Yes, so you can think of a company as like an entity where there's many stakeholders, right?
Mm-hmm.
Okay.
There will be employees, there will be people who lend the company money as well, right? And there's also people who own the company, right? So when you own the stock of a company, you basically own what's left of the firm after all of the different stakeholders have their part with it.
Oh,
I
right.
see.
okay.
So for example, in the case of a very bad situation for the company, such that it goes bankrupt, right? When they declare bankrupt, the company will have to sell off its assets and pay the employees first, pay the people that owe money to first, and then the shareholders, right, or the owners of the stock will be left with whatever that the firm has.
Oh, okay. And that's how people like lose a lot of money in investments lah.
That's true.
Yeah.
And also, you also get all the upside of the firm as well, right? So when the company does very well, of course you can get more bonus, but there's a cap to it, right? And if the bank were to lend money to the company, they would get back the interest as well as the money that they lend to the company, right? But that upside is capped based on the loan agreement. Right, but as a shareholder, you get the remainder of it, right? So generally speaking, right, as a stockholder, you own the most upside of the firm, right? As within the compared to the employees or compared to people who lend money, but you also have the greatest downside to it.
Okay.
Ooh,
So
I
that's
see.
stocks. I
Stocks.
hope that's simple enough, right?
Yes.
And then conversely, I already mentioned a little bit about bonds, right? Or
Yes.
people who lend out money to companies or even countries, right? So when you lend money to someone, right, you don't have the money yourself, and then you are also taking on some risk of the country or the company not paying you back, right? In financial terms, we call it a default.
Ooh. So default is the risk of you not paying me my money back.
Yes,
Okay. Sad. That's so sad.
but because you have greater legal rights to the remaining value of the company,
Yes.
right? So it's deemed to be less risky to own a
A
bond or a debt that the companies owe you compared to the stock.
Oh, okay. Am I right to say it's because stocks is the remainder that's given out, right? Whereas bonds is sort of like a contractual agreement almost. So
Yes.
I'm almost guaranteed to get it back.
Ooh, okay.
Yeah. So the way to think about it is that there is an order towards the access to the value of the firm when there is bankruptcy, right? So typically, because of like protection of workers' rights, right, employees will get it first. Then later
Yes.
on, the debt holder, right? And then to confuse you a little bit more, right, within the finance space, different debts can have different seniority, right? Meaning to say they have different, they might, the debt obligations have to be fulfilled first before those that are more junior will be fulfilled, right?
I see.
And then, of course, the more junior debt will have to be compensated with a higher return.
Right.
And as it goes down, then the remainder will be the shareholders.
Lesser. Okay. Understand. Wait, you broke down the terms really, really well. I think I understand stocks and bonds now, and hopefully our audience does too. Okay, thank you, Tina, for raising up your marshmallow. I have another question actually for Sheng Shi SS. So,
Yes.
what about you? Have you ever made mistakes in investing?
Oh, for sure. I think when I first started investing, there wasn't a lot of people guiding me. So what happened was that, I think for us Asians, we have the mindset that we want to buy things cheap.
Yes,
Right.
definitely.
And for me back then, it was looking at a different funds that I could have bought. Right, we talk about asset classes just now, right? So what I wanted to build for my portfolio would be something with equities, something with bonds, and then something with gold.
Marshmallow.
Yes.
Sorry. What is equity?
Stocks.
Oh,
Oh,
okay.
Equities and
Equities,
stocks
stocks.
are used very interchangeably.
I
okay,
see.
okay.
Okay, thank you
Yeah.
so much.
Sorry,
Yeah,
sorry.
so stocks, bonds, and gold,
Gold.
right? And at that point of time when I was investing, right, the stock market was doing quite well, right? And the bond market was doing quite well as well, right? But gold prices seems to be very cheap relative to historical prices.
Ooh.
So I started investing quite a fair bit in gold because I was waiting for the stock price to
Yes,
drop.
I would do that too, right? If like gold price is cheap.
Yeah, but what happened was that the stock prices just kept on going higher and higher.
Oh no.
And I eventually got to a stage where I realized that, it doesn't make sense for me to wait for it to drop because over the long term, market highs will be followed by new all-time highs, right? So I just bit the bullet and, stop anchoring my thoughts against historical prices and just start getting more equities exposure.
I see. Okay, wait. Let's talk about that more. So in this sense, right, you gain some financial discipline because you knew when to pull back the reins. How did you do that? When did you know, like, put my money somewhere else?
So that mistake I shared just now is actually quite a basic and novice mistake, I would say, right?
Okay.
Especially for someone with my background. So I used to study in NUS Business School. I majored in finance. I always was very interested in the modules that I study, right? So it's not just trying to get my B pluses, A minus A's. It's really just having the interest to read, be above and beyond what
Good student lah. He's a good student.
He likes the knowledge.
Yeah. So I also took the opportunity to apply what I learned into investing as well, right? But what you learn in theory versus what is being what you experience as an investor is actually very different, right? There's definitely an emotional element to it.
Yes.
And then, some of our bad habits when it comes to like shopping will also be reflected in our investment experience as well.
So like impulsiveness.
Exactly, impulsiveness, trying to buy things cheap, so those tendencies would reflect, right? Even though based on our knowledge of the history of financial markets, that might not be the best way to invest, right? So I had to go and, take a step back, try not to be very human about it,
I see.
right? And reflect whether my investment practices impulses even, right, is really the right way to invest.
I see. Okay, so reflection is very important, guys. Remember to reflect before you make any big decisions, not just in finance, but in life in general. Yes. Okay. Now, Sheng Shi, I want to ask you something else. So, regarding all this, you've experienced saving, losing money, and now, with regard to your future, would you like to achieve financial independence, retire early? That movement?
Fire. Do you want fire?
Yeah, I think the term financial independence, retire early. People will often focus on the word retire early.
Yes.
Right. And I think it's very confusing because retire early could very well just be doing nothing at all, right? Or retire early could just mean that you are, doing things that you're passionate about or would like to explore, right?
Yes.
Volunteering, taking on some side projects and so on, right? I think Tina mentioned it in her article. So
He got read our article. You should read it too.
Read it. Yeah.
Yes.
So for me, I feel that ultimately whether you reach financial independence is a function of how much you want to spend now versus how much you want to spend in the future, right? Because for most of us, right, we don't have a big inheritance, and we are trying to make a choice of like, okay, one end of the spectrum is like the YOLO lifestyle, right? We are only early 20s, right?
Yes.
I'm only
Early
35,
30s.
yeah, 35 once, and should I be spending the savings that I have now, right? That's one side of the spectrum, and then the other end of the spectrum is, trying to work towards financial independence so that we can do whatever we want later on, right? So there's these two ends of the spectrum.
But so with all this in mind, right? Then SS, what about you? So where are you at? Are you on this FIRE journey or just FI or just RE?
I would like to think that I've already reached the financial independence state. That is it's not that I have a lot of savings, right? It's more that
Look at your bank account later.
okay.
Scary.
We'll share a little bit more later. Yeah, but my how I reach there so quickly is really because I save. I don't spend a lot, right? So I think if you were to, again, shout out to Tina's article, right? If you look at what's the FIRE number that you need to have, right? A big part of it is based off how much expenses you need. right? And if that
Yes.
expenses is a very small amount, then you're gonna reach FIRE a lot earlier.
Yeah.
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 But as I am struggling to save, you know, and I think some of us, a lot of the young ones like us, we just don't know how to save, right? I really like my coffee. I know that it's $6 or $7,
Yeah.
but it just tastes good. And right now, maybe I'm in a stage where I just want to enjoy a little more. So do you have any advice or tips for someone like me?
It has to be. I think the way you think about it is really good, right? You are asking yourself whether you should spend the coffee or not, rather than, hey, my friend seems to be able to afford all of these and still seems to be doing very well financially, right? And therefore you feel bad about yourself, right? I feel that FIRE journey is very much a personal journey, right? And
yes.
conversation,
Personal.
and we should not be too embroiled into that social media comparison thing that's so prevalent nowadays.
Oh my god, it's like the typical quote where comparison is the thief of joy.
Exactly.
I like that.
Exactly.
I like that.
Yeah.
Yes.
Yeah.
I definitely agree. I see that SS, you are really good at reflecting because you always think about like whether you really need things or not, and then you think about your future, and I feel like that's something that we all should adopt. Yes, especially as young adults who are very exposed to social media and consumerism. Yeah. And also maybe you could you share a bit about whether you think FIRE is for everyone in that case?
It's going to be very, very difficult to determine whether a FIRE is for you, right?
Yeah.
Even at any point of time, right? So our views and values would change as we grow.
Yes.
For example, right, I was at FIRE already, right, before I got married.
Ooh.
And I was thinking of like, hey, maybe I should take a sabbatical break,
Yes.
right?
do
And
it.
then
This is why we cannot achieve anything.
just want to take a
because
break
Tina
without
and I are
working.
always like, let's
and
say-
you're still students and you want to take a break. What's going on?
yeah, that's why. Like, what are we doing?
I want to spend all my savings on grad trip.
help.
Yeah. So, but you see, I was very confident I'm financially independent,
yes,
and I wanted really to take some time off from work
Correct.
to think about what I want in life, right? What do I want to achieve in life? But you know, life happens. I got happily married.
Yes.
My parents retired as well, right? So suddenly there are like a few more people that I have to
take care of.
right? And as much as I would love them, I want to take care of them. I also appreciate the space that working give me, right?
Oh, wait, this is a really interesting mindset. So, are you trying to say that you're trying to avoid your wife by working?
That's not what I'm saying. That's not what I'm saying.
Tina's gonna
But
get in trouble.
yeah, having that little bit of space for yourself when life, where there's like big changes in your you and your family life, right, will affect how you think about FIRE, right?
Yes.
So that's one aspect, right? And then of course the other aspect is, you know, we don't necessarily spend the same amount of money all the time, right?
Yes.
We
Emergencies, unexpected expenses.
yeah, having
Oh,
a
yeah, that's true.
child.
Having a
Child.
child.
Yeah, there's so many
Yeah.
things going on that career switches, mid-career switches, and so on, right?
Mm.
So all of this will affect how you think about FIRE, right? And the most important thing, really, what I'm trying to say is that financial independence, right? Having the money to do so it's just a way for you to get resources, right? To achieve a certain life goal,
Yes.
right? It shouldn't be having that money shouldn't be the first and foremost goal.
Okay.
Yeah,
So
or else it's
right.
going to be very difficult.
Money
Yes.
should support your other goals. Money
Yes.
shouldn't be the ultimate goal.
Yes.
I like that a lot.
Yeah, and actually, I thought that's a really important message to remember, because sometimes, you know, we get so caught up with money, right? We are always
Yes.
looking at our bank account balance. We get stressed over it,
Yes.
and then I think that might affect our mental health to a certain extent also. Yeah. So personally, for you, have you ever felt burnt out in this financial journey?
Not really, but I see some of my friends who are, you know, again, very embroiled into like comparisons, right? They'll see like, hey, so and so friend is doing so well and I'm not doing so well, right? How do I catch up? And this is actually a very dangerous way of thinking, right? Because when it comes to money, it's not something if you are starting behind already, right? It's not something that you should try too hard, right, to catch up, right? Beyond, especially through investments, right? Of course, you can do as more jobs you can take on more jobs, you can do more side hustles, right, to
Yes.
increase your income. But it's going to be very difficult to make any so-called perceived shortfall through investments, right?
I see.
Because if it's so easy to get higher returns just by making more risky investments, then everyone will be doing it, right? They'll
Yes.
all be we'll all be
I'll be
solving our
rich.
life
Yeah.
goals
With
using investments.
Yeah.
But does this mean that hope is lost? Like, let's say
Hey.
right now I'm on a different starting ground as someone else, then does it just mean that I could never catch up in time?
Not just with investing, right? But when it comes to money management, we should have a longer term view towards things. It's very difficult to look past, your student debt
Don't copy
now.
me lah, you. Sorry, Tina always, right? I pick up my marker, she pick up also.
It's like during
Hey.
exams or lectures.
Yeah.
You keep looking at my direction, okay?
Yeah.
Sorry, back to you,
Yes.
SS.
So the power of compounding when it comes to investing is actually something really, really incredible.
Right.
Yeah. So, so don't get disheartened, right? Just work towards a longer term goal, right? And something that you will not be immediately be able to get, but it's tremendously helpful is the discipline, the money habit, right? If you have a right attitude, you have the right mindset towards managing your money, that would really help you grow your wealth over like 5 to 10 years.
I
Wow.
see. Okay.
Yeah. Or
Thank
even
you.
longer. Yeah.
Thank you so much, SS. I actually feel so reassured right now. This is almost like a therapy for money.
Yes.
Okay, but so let's have some fun right now, okay?
Okay.
So we're thinking we could play a little game called Show Me the Money.
Yes, but don't worry, we're not gonna ask you to rap or anything.
Yeah.
It's a game where we go through our little financial scenarios and you would advise us, like, not financial advice, but you would say what you would do in that
the situation.
scenario.
Okay.
Yeah. And these are real scenarios, by the way. They are like
Mm.
things that we sort of like gotten off the internet or
Yes,
like from
and
our
also
own
ours.
experiences.
Yep.
Yeah.
Sure.
Okay, so the first scenario is I've just earned my first paycheck of $4,300. What should I do?
Well, nothing to do with the paycheck. But so some of these problems actually, when people ask this question, right, I think what they should have already thought of to get their finances in place is to think about, where they are in terms of their debt, right? For example, do they have student debt?
Student debt.
Do they have high interest credit card debt?
Mm.
That's one aspect, right? And then the next aspect is what are their more immediate short-term financial needs,
Mm.
right? And then the last thing is, whether they have an emergency fund.
Oh,
Right.
okay.
Right. So
emergency fund.
nothing to do so much with the salary, but more of like, with that salary and the consequent saving, right? Would they be able to go and look through some of these very pressing financial needs and use the money to pay for it, right? So they may want to apportion a part of the money to, pay off some of the high interest credit card debt, and maybe even use some of the money to build up their emergency fund, right?
I
So the
see.
intuition is to say, oh, you go and reward yourself because it's your
Yes.
first paycheck,
Yes, yes.
right? But I think it's going to be very irresponsible to do so if you are already in like knee high in debt and then you are trying to reward yourself.
Yes.
Yeah.
Yeah.
Actually, this is just a little segue, but have you ever heard of the term girl math SS? And what are your thoughts on girl
Girl
math?
math.
Girl math. I think it's just one of those things that make me want to avoid social media.
No.
We are victims
Of
and
girl math.
of girl
We are
math.
advocates
Yeah.
for girl math, actually.
Oh yeah.
Okay, let's not spread this. kind of- yeah.
Don't do
Yeah.
girl math,
but
guys.
like, girl math is actually quite a dangerous mindset, right?
Yes.
Because
Yes.
I know certain friends who they would like take money in cash. So
Yeah.
when they feel like they're spending cash, it's like free money
free
because
money.
the bank
Yeah.
account balance doesn't drop,
Yes.
right? Or yeah, I'm looking at my director up there. That's her. Or like how we tell ourselves that okay, because today we
We
didn't
had
manage.
such a hard day.
Yeah, yeah.
We had such a hard day, so we deserve this $30 meal.
Yes. Or like because we had such a hard day today, we didn't manage to go for our cafe lunch.
Yes, yes.
Therefore, for dinner, we can have double the budget.
Yes.
I see.
Yes.
So I think for social media, there are things that are really fun and viral, right? But when it comes to encouraging behaviors on things that are important to us, like our health, like our money management mindset,
Yeah.
I don't think that's where we want to be a bit too fun with things.
Right.
Yeah.
I understand.
So maybe I can do like girl math with my friends because we are we know ourselves and we are generally financially disciplined, right?
Yes.
But
Okay.
if it sort of like breeds a bad investment
Yeah.
behavior or money management behavior, I think that's not really the right way
Yes,
to go about it.
definitely.
So Sally,
Yeah.
we will do girl math the moment we reach FI.
Yes, the moment we
Because
FI.
by then everything is stable, you know?
Yeah.
$30 cafe lunch, let's go lah.
no lah, we still have to FI. We still have to FI
next
first.
question.
Okay, the
Next
second scenario is if I only have $1,000 in my bank account, should I be investing a portion of it?
scenario.
Yeah, so it's goes back to the same point that I was trying to raise previously, right? It
Yeah.
doesn't matter how much you have in your bank account. It doesn't matter what's your salary now, right?
Mm.
But really, where are you financially, right? So it's important to know where you are financially in terms of your debt, in terms of your short-term financial needs.
Yes.
Then you can think about, whether it's a good time for you to invest. And even before that, you should also be do research on all the different investment options out there. Whether you have other more incoming money in the future for you to invest, right? So that you can build a more consistent, deliberate plan towards investing. Yeah.
Right. So it's like we should never jump the gun or, think that, okay, because everybody's investing, so I should also start. We
Yes.
should wait till when we are comfortable, maybe we have lesser debt or clear all our debts, then we can start to think about growing wealth. that way.
Exactly.
I see.
Okay. Then let's say that I'm lucky enough to have like a big portion of money in my bank account, whether it be from my parents, from my previous saving. Let's say I have like maybe $50,000 in my bank account. Then there's a trending new cryptocurrency, Firecoin. Should I be investing in it if it's like, whoa, it's rising so fast?
Yeah, like Dogecoin.
Yeah. So when it comes to more I will call this speculative
Speculative.
investments, right? These are things that I don't feel we should invest too much time and effort on the get-go, right? So I feel that everyone needs to build their investment mindset and discipline first before they think about more niche way of investing,
I see.
right? So the first investment experience for people, I would say it has to be as orthodox, as boring as possible, right? So that and even doing so, right, it's going to be can be very stressful for you as well, right? So just as an example, right, during the COVID period, some of the broad market funds and ETFs that I buy, right, these have like underlying 1,000+ companies. They also drop like 30-40%. Right, and for me, I literally lost like an entire year's worth of salary.
Wow.
Right, and you can imagine that it is a bit of financial stress for me.
Yeah.
Yes.
And for people who invested in single stocks or even picking cryptocurrency, right, they might lose even more money.
Yeah.
Right, so having to go through market volatility when you are investing in very diversified, low cost, long-term investment solution can be very, very stressful
Yes.
by itself, right? And as you accumulate wealth, right, the amount is going to be bigger and bigger,
Yeah.
right? So if you start off with $10,000, 30% is just going to be like, okay, it's still a big amount,
Yeah.
$3,000-$4,000, right? But if you were to, times 10 that amount, then you're going to lose $30,000-$40,000,
Yes.
right? So everything is just going to feel a lot more stressful.
Bigger, yeah.
Yeah, so the boring stuff is actually not so boring and not so easy when you are looking at bigger amount of money, right? And that's also why many people, including our parents, they don't hold a lot of investments. They actually have a huge amount of cash or sitting in fixed deposits, bank
Yes.
account, right? They don't manage to get past the stress of investing.
Yeah, definitely. I would say, like, for my own experience, my parents also don't hold a lot of money in investments. And that's why I think for myself, investments has always been a really taboo topic. So, yeah, I've always heard save money, but never diversify your portfolio. I've only heard that from friends. Yeah.
In fact, I think it's getting stressful now because our parents didn't tell us all these investing things, right?
Yeah.
But we're hearing from our peers, from our friends.
Yes.
Yeah, so I think today's episode is really, really very helpful because you're giving us these insider tips when it comes to investment.
Yes. No, it's really like investments 101 for
Yeah.
us. Like, what are these terms? Or what should we start with? So, boring is best.
Boring is best.
Boring is
Yes,
Yes.
100%.
We will be very boring.
So
Okay.
I think this has been a really great chat. But before we end things, shall we give SS a recap of what we have learned today?
I'm nervous.
Sure.
Okay. So for mine, it's a lot of words. I don't think you can even see it. But
What the?
Basically, let me just try and recap it, okay?
What the?
So
This is not.
stocks
Wait.
is about what?
Pause.
Why?
For
Why?
listeners, right? You should see the ridiculous amount of words on her paper.
Because I'm just such a
It's
hardworking
ridiculous.
person.
Okay, go ahead.
It's a lot of words though. Okay, I will summarize into 3 key points.
Yep.
First, stocks is about ownership of a company. Okay, there is a cap to it. So it's not bad. Bonds is also not bad. You can lend out money. Actually, I don't remember what I write already. Never mind. My bag is just know where you're at, don't compare.
Lame, she copied me.
Be consistent and be boring.
What the? Okay, just for our listeners, right? Because I started writing at the back. So Tina, I guess she saw that. So she flipped her paper also and she started writing at the back.
Okay, Sally, just stop the yapping and
Okay,
just tell
I'm
us
so
what you
sorry,
learned.
SS. I'm so sorry. I'm so sorry for this unprofessionalism here today. But
Sorry.
for me, my takeaways are also about stocks and bonds. But I feel like the takeaway here is from Sheng Shi's values and what he carries with him through his life. So I highlighted here reflection. Reflection is really important when it comes to being making financial decisions and also knowing where to put your money. And also I put be boring in the little corner over here because as beginners, let's choose the safest, most boring option to ensure that we don't lose most of our money. And then at the back, I wrote really bigger, even more bigger, reflection plus discipline. So knowing when to rein back on your spending, on your investing, and just trying your best.
Yeah.
Like I will be sure to reflect and be disciplined right after this episode.
Me too.
Yeah, maybe just to add on, I really love how you guys, both of you, feel that like reflection is very, very important.
Yes.
But when it comes to like the part about be boring, right? Choosing very diversified, low-cost investment vehicles are boring, right? But it can also be very volatile. Right, so that's where having a very clear view of what you are putting that money for is important, right? So if you are going to need it for very, very immediate needs, let's say your housing, mortgages, wedding expenses and so on, right? You should not be investing in stocks where it can be very, very volatile in the short term. Right, but of course, if it's going to be for retirement, that's fine, right? Because short-term volatility doesn't matter at all.
Okay.
Right.
Wow.
So there is a bit of nuance there. And it's so easy to get started with investing nowadays, right? Back when I started, for you to buy a single security on the stock market, because the transaction cost, the minimum transaction cost is like $20 plus $30.
Wow.
It will make but you have to buy like a very big 4-digit or 5-digit amount for you to get started.
Yes.
Right. But nowadays with like robo-advisors like Endowus, for example, or even some of the other online brokerage platform, right?
Yeah.
You can get started with a much smaller amount. Right. So you can get yourself used to that bit of like market volatility, like with a much smaller amount, like $100, $1,000. Yeah.
Wow. Thank you so much, SS. I really think that that's really great advice, right? It's basically knowing that now investments have been made easier through different platforms and anyone can get started. Just remember, don't compare yourself to your friends and only decide what to do based on your own circumstances.
Yes.
So
understand the
with that,
nuances and stuff. Yes, definitely. So all right, we'll try to definitely learn more and we'll get back to you if we learn anything spectacular. Then you can evaluate us again.
Okay, sounds good.
Thank you for joining us today on Spotify or YouTube. Don't forget to like and subscribe. Follow us on Instagram at playingwithfire.sg and check out our website at www.playingwithfiresg.com for more tips.
See you next time by the fireside.
Bye.